welcome everyone. This is the second series of our webinar, and today we have a fantastic partner, ACI Worldwide, joining us. The topic today is in payments. So it's heavily around operational resiliency and adapting to change. In particular, what are some of the imperatives in payments and financial services? So, well, let's start. I've got two fantastic speakers or guests here on the panel. Ramon Villarreal, who's from Red Hat. He's our global head of payments, and Richard Avery. So maybe let's start with Ramon, and then Richard, you can introduce yourselves, but then also tell us a little about ACI Worldwide.
Yeah. Hello, everybody. My name is Ramon Villarreal. And as Richard said, I am the payments industry lead in Red Hat. It's a pleasure to be here, and thank you, Richard. Richard?
Ramon, Richard, thank you for having myself and ACI along to this webinar. To introduce myself, I'm Richard Albury. I head up our European commercial business in our banking and intermediary sector. Been with ACI a couple of years now, and prior to ACI, I was actually working inside Nationwide Building Society, and very much at the forefront, leading on operational resilience through procurement and transformation roles. So a very topical topic across the industry at the moment.
Great. So let's start on the topics then. I think as we all know, there are a lot of challenges, and payments is probably in the financial system one of the most critical elements in the industry. It's also going through massive change, which you guys are experts in, and we can talk about. But I'd like to start with sort of the challenges that are faced, particularly around operational resiliency. So maybe if Richard, if you could start and sort of from your perspective, what do you see some of the challenges that your customers, our customers face in terms of the payments area?
Absolutely. It's a topic that is dominating our conversations with clients. I think if we look back maybe 5 years ago, there was very much a focus on technology first, on form and function in terms of what products do and what it enables on behalf of banks. A lot of the questions that we get today center and actually start with resilience. Tell us about your uptime. Tell us about your non-functional requirements. And that is very much due to the fact that we now live in an instant 24/7 world. Regulators too are putting increasing focus on banks' responsibility to provide payments 24/7. And again, that links very much to consumer demand. In terms of the regulation, there is no one-size-fits-all. Regulators will give a clear set of guardrails and guidelines to banks, but they also, a few years ago, introduced the notion of proportionality. So a big tier one, clearly with their customer base, will have to have significantly more resilience in place than a growing tier three type organization, where there is less impact, not just on their customers, but the overall economy if there is a payments outage. One of the key challenges linked to that is interpretation of regulations. So where, as I say, banks will not receive absolute guidelines on what they need to do to comply, they need to figure that out for themselves. And there is no, as I say, one-size-fits-all answer. But equally, there is no golden bullet when it comes to resilience, in particular with architectural structures.
Yeah, I mean, as Richard said, thank you. As Richard said, banks and financial institutions, especially right now across the world, but also in Europe and in the UK specifically, you can see that there is a really big focus on resilience. It's quite interesting because, specifically in the payments market, it is something that it used to always be there. And then with the advent of immediate payments and the advent of the new capabilities, it all became a lot more around the functionality And now suddenly the regulator says, it's not only about the functionality, guys. This has to work constantly. We need to maintain a system that doesn't fail. Business continuity is important, and our system have to continue evolving. And you see that in the regulations like DORA, that the Operational Resilience Act, like all the regulations around the world, that are driving that. It's kind of a reminder to the industry, to the financial services industry. You need to pay attention to reliability. I mean, in latest years, you can see that there has been a lot of outages in different areas, and that has an impact not only in terms of the operations, not only in terms of the reputation, but also what is happening in the day-to-day for people. So that is why that is a big focus. I think the other challenge in that is potentially the cost, because maybe you would be saving a little bit of money around not maintaining a system that is not so resilient, but actually the long-term cost impact of not having a completely resilient system it can be exponential. So it's quite an interesting situation right now, and I think it's something that the industry needs to pay more and more attention into.
Oh, great!
Great. I'll pick up on that point on cost just quickly. What we're seeing at ACI through our conversations with our customers is that link between payments and online and mobile banking services to customer engagement that traditionally in the past was very much through mediated channels such as branch networks. But payments very much being always on is seen as a mechanism to build trust and further provide additional products to their clients for aspects such as savings and credit cards. So there is absolutely a cost element, as Ramon says. But what banks that we're talking to are increasingly looking at is actually what the impact is if the platform or payment systems aren't available, not just in a siloed payments impact, but actually what that does to customers' perceptions and the likelihood that they will take out fee-earning products across the broader bank.
No, great. You touched on this already, but I'm just curious what you see in terms of customers. How are they addressing these bigger problems, sort of generically? And then I'll go a little more specifically what ACI does as well as what Red Hat does. But just sort of the big picture approaches that banks are taking to ensure resilience amongst all the regulatory changes in the different countries.
Yeah, I mean,
go.
Yeah, sure. I'm happy to go first. Thank you. It's quite interesting because what you see is that, a few years ago, we were talking a lot about cloud adoption and the utilization of cloud as a way to reduce costs, but also improve efficiencies around financial services systems, et cetera, et cetera. What you see with the change in the regulation and these new regulations is a lot of organizations are rethinking their approach to cloud. I'm saying my reliability is not only depending on a potential cloud, it's about how do I extend that reliability beyond the singular organization that I'm depending. Multi-cloud is becoming more and more part of the conversation, but also hybrid cloud and the reutilization of those capabilities that they maintain in their environment. Why? Because the system needs to be reliable beyond the dependency of these organizations. Another thing that is really important and around DORA specifically is around transparency and the reporting of what is happening with your system. You need to have a clear visibility, and you need to implement new systems and new ways to actually report and audit your infrastructure and provide that level of information for the system. And the third that we are seeing a lot, especially in our conversation with our clients, is around cybersecurity and what is happening in terms of level of access, control of the systems, functionalities that are beyond just the basic standards of accessibility. And it gets into the point of how do I ensure that the system doesn't pose a potential risk when it's interacting in this open environment. So it's quite a dynamic conversation. There's a lot of other requirements, but I think those are the three highlights that I like to make. I don't know, Richard, if you want to add more.
Yeah, absolutely. I mean, hypothetical scenarios of the past are now very real. I think every week somewhere in Europe, if you open up the local media, there are reports of outage, dissatisfied customers, payment systems down. So what was previously very hypothetical is now very real. And Ramon, you're absolutely right. Multi-cloud is a conversation that's dominating more recently. But actually, I'm seeing that expand. The banks are actually asking for multi-everything. And going back to the failure scenarios, control is really dominating. So some of those architectures that relied on maybe single vendor or single platform are very much now being challenged by the banks because they want multi-everything. And when I talk about multi-everything, that very much links into hybrid cloud, as you say. Secondly, what banks are also looking at linked is, do they need secondary, not just active, zero RTO, RPO type infrastructures? They're table stakes now. Do they need secondary failover environments, be those dedicated to the bank or even at industry level, so that if the unthinkable happens and payments go down for a sustained period, there are other platforms, other infrastructures that can be either spun up immediately or incredibly quickly to take that demand.
You know what? I spend a lot of time with central banks and regulators globally, and this has been the case over the last 5-6 years with sort of the movement to cloud. The regulators are very concerned not only about an individual institution on a mission-critical platform like payments, which is probably one of the most mission-critical, but also around systemic risk, which is not just having one institution sort of locked into a particular platform, but having a group of them locked into the same platform. And that's sort of the regulatory concern. It's not relevant to a specific institution, but it is very top of mind with the regulators who take a more global sort of systemic view of operational resilience. So I think this is an industry that's sort of in the hot seat, but it's also fascinating because it's driving so much change and innovation and new capabilities. So that leads me to sort of the third question, which was, and I'll start with you, Richard. How does ACI help your customers sort of address these capabilities and any things that you want to particularly highlight that you do with customers?
Yeah, thank you. So the key word is control. And you're absolutely right. This has been a theme that's been increasing over a number of years with regulators, central scheme operators, and scheme rule books. And one of the things that's fundamental to ACI's business is that we will not restrict how any bank wants to use our technology, certainly going forwards. So unpacking that a little bit more, what that means is that if a bank, either for technology choice or because of strategy, or because of, as you talk about, Richard, the systemic risk with their wider supply chain portfolio, they decide that they want to run ACI's applications in a private cloud or hybrid cloud technology that others can't provide. ACI will enable that. So we take a very risk-based approach to give the flexibility to banks rather than restricting how they can use our applications. What we're also doing is recognizing that the majority of banks, to Ramon's earlier point, are challenged with cost. There's a lot of focus not just on regulation, but also the cost efficiency across banks. So if, for example, a bank wants a SaaS ACI managed service, they've absolutely got that option. But they've also then, from a regulatory perspective, got the option to take our applications and deploy them under the same license structure into other environments that they so wish.
Ramon?
Yeah, I mean, it's quite. Yeah, on the Red Hat side, it's quite interesting. I mean, a lot of the conversation, and we're getting a lot of conversation around operational resilience, is how we help organizations enable multi-cloud, but also not only that, is how we can help them go beyond that and leverage other environments. There is a lot of interest in reutilizing the capabilities of their existing mainframe infrastructure. So we can help them with that by utilizing the same platform to connect into the Power or Z or other environments. There's also a lot of relevant information that the client needs in terms of the reporting about the situation in operational resilience, et cetera, which we do a lot of work in, not only around automation of those processes, but around the way that we audit our systems. And we've been doing a lot of work in terms of providing the information on how they work, what is the origin, what is the level of access of data, et cetera, with the regulators. And we actually have dedicated teams working on that area. There's a lot of work that develops around operational resilience, and specifically around the Operational Resilience Act in Europe, the DORA, sorry, which is it goes beyond about what is happening specifically in the financial institution. It gets into how they provide their services, that financial institution, and what are the capabilities that they provide. And we have been doing a lot of work in that area. Obviously, the older angle, and coming back into ACI, is about ensuring that when the capabilities and the products of ACIs are deployed into our systems, they are tested, they are proven, and that we can guarantee a certain level of reliability with this. And we're doing a lot of work currently with them in terms of testing and running their new platform in there. So, yeah, I mean, I think those are a few of the highlights, but there's a lot of more that we can say about these points.
There is, Ramon, and I think when we talk about operational resilience, it's very easy to focus on the failure scenarios, as in when everything has gone wrong, doomsday. And what a lot of folks might not see behind the scenes is some of the new enhanced use of AI, for example, for proactive alerting and monitoring. So very much not waiting to see an incident, but predicting that and having those mitigations in place ahead of any outage. I think also I'll just pick up on some of the service management principles. Business continuity, disaster recovery, absolutely fundamental. Not just having paper-based scenarios, but having those fully tested and having all of those protocols and people ready in advance if an unthinkable outage does arrive. And thirdly, I think I'll just add to what you say, proactively thinking about what if we need to exit under a stressed or a unstressed scenario. What does that actually look like? From a payments perspective, would you look to use alternative rails? Would you look for stand-in services? Would you even perhaps look for an alternative bank to process your payment transactions and your traffic on your behalf? So what we do at ACI is very much take a product view, a solution view, but we also complement that with the consultancy of what we see globally and how we advise our clients to proactively mitigate any outage.
It reminds me a little bit of a.
No, go ahead.
It reminds me a little bit of the engineering, patterns of NASA. You have to do a lot of work around reliability and ensuring that you have constant backup systems to actually and redundancies to actually solve the problems. Sorry, just a last point.
So I was, these are fascinating sort of insights. Let's sort of think about what you're seeing in your customers, and what do you see for trends in terms of, what have you seen customers doing, say, up to today in terms of how to address resilience, but also how to take advantage of this sort of real-time world that everything has moved into? And then what do you see coming down the future? And Richard, you hinted at AI, and I think there's some good areas there, but it'd be nice just to get your thoughts on where you see things going with your customers and also globally with the industry.
I think we've been through a sustained period over the last few years where banks, from a technology focus, have maybe prioritized SaaS and SaaS only. Certainly, the conversations that we're having with those banks is, again, linked to operational resilience failure scenarios. What are the hybrid type environments that you can stand up, not on a fully static basis, but potentially with some low volume parallel running, so that you're not pressing a button, crossing your fingers and hoping it works, but you've got a tried and tested alternative pathway to process your payments that you can scale up in the event of sustained outage. So very much coming to a more balanced technology, business and risk position on payments processing, rather than, I think, what we've seen over the last couple of years, where it was modernization based on technology first. I think the second thing that I'll look ahead to is a consolidation of payment types. Again, linked to risk, the European Parliament and trade bodies, we know, are getting increasingly concerned around some of that risk on one or two providers, particularly network providers in the markets. So what we're working with clients on and looking ahead is, how do you leverage ACI's existing and future capabilities to act as resilient failover, or actually modern proposition-based alternatives that you can offer to your client if a bank wants to adopt that type of strategy. And just to give you a bit of example with that, I had the privilege of being in Brazil recently, and they've got a scheme called Pix. And I had the option when buying some tickets for my wife and I to press debit card, credit card, or the instant payments button, Pix. And I am increasingly seeing, particularly in the UK and Europe, the convergence of payment types and the potential for consumer adoption and consumer choice of which payment rails that they wish to use.
Ramon, do you want to share a little about what you're seeing customers doing today versus what you think they'll be doing tomorrow?
Yeah, I think Richard, mentioned some really key points. There is a really big drive in innovation in terms of payments, and it's quite interesting because in the last few years it's become driven by the regulators, with the interest of decoupling from the existing networks, the credit card networks and others. So you see what Richard mentioned with Pix, what is happening in India with UPI, new initiatives like an interest of connecting all the payments network across the world. It's about open optionality, and you are seeing some of what is upcoming with the PSD3 Act, for example, in Europe, and that is going to be preeminent in the short term. And I think that is going to drive new capabilities and new functionalities, and the customers are going to be really, really interested. But also banks want to get in there because there is a potential for new abilities to compete in the market. Mm-hmm. The other side that is quite interesting, and Richard mentioned it before, is AI. AI and AI capabilities are coming into the payments market quickly that we thought. 2 years ago, I would have said, well, there is not much AI in payment. Nowadays, we're exploring use cases, and we are seeing a lot of organizations looking to implement it more and more in the different capability. What Richard mentioned, the ability to route intelligently in other environments, the ability to simplify remediation. There's a lot of capabilities that are being studied with AI. I mean, and let's not talk about fraud. I mean, it's always been leveraging predictive AI. Now we are getting into the next step. So there's a lot of work in that space. And the next step, the scary future or the fantastic future, the cryptocurrencies. They are being studied. They are there. They are present. We have the potential for central bank digital currencies, and it's going to become a reality really soon. So, yeah, it's an interesting market.
Certainly is, and I wish I'd put an investment into crypto 15, 20 years ago. I think every time I see the latest who's made what money, it makes me very jealous and regretful. But I think even linked to crypto, what we will see over the coming years is regulators and scheme operators taking a more active and perhaps direct interest in how banks, on behalf of the consumers, but how banks are setting up their systems. I think very much from a technology perspective, and certainly within ACI, we use technology as an enabler for operational resilience, but there are still restrictions based on other ecosystem constraints, very much in the scheme and network operator space. And I do see increasing pressure, not just on banks, but as Ramon said, under DORA, third parties, technology third parties, but also in the future, network scheme operators and regulators also taking their share of responsibility to how to enable the possibilities of what technology can deliver, but also in the future AI.
Well, I think we're getting close to the time. I wanted to thank both of you, Richard and Ramon, for a fantastic conversation. And as most of you in the audience know, ACI is one of the largest global payment providers with incredible history and pedigree. So we're excited to have them as a partner. And we look forward to working with them to sort of see where the payment industry goes in the next 5 to 10 years. So thank you both for joining. There's on the slide you see there's a couple things you can scan to get more information and details. Also on the next webinar session that's coming in about a week or so. But please reach out to Richard on the ACI side for any inquiries you have in terms of how to sort of future-proof your risk into the payment space, because it's rapidly changing and it's not going to slow down. Thank you very much for both of you, and thanks to everyone for joining. Take care. Have a good day.
Thank you.
Thank you.
Thank you very much.